How's it going, guys? Another education video today. We're going to talk about reversal patterns. So we'll be looking at rising and falling wedges and how you can spot these as well. As always, if you could give us a like, subscribe, hit that notification bell, and let's get into it.
Altsignals.io.
Here are probably the most common reversal patterns that you will see, which is a rising and falling wedge. So your rising wedge will indicate a bearish reversal, and a falling wedge will indicate a bullish reversal. So with a bearish wedge, what we're looking for is higher highs and higher lows, but at the same time losing momentum to the upside. So what we mean by that is, as you can see, there's been a massive spike in price here. This is the uptrend, and then as time progresses, you can see how the space between the lines are getting shorter, but at the same time we're seeing an increase, so it starts to create a wedge. So it's getting tighter at the top here, as you can see. So here are your touch points that we'd be looking for, and this would be the area in terms of where we would see it be a reversal now, and would see a bearish trend, so we'd see this drop right down. The same for the bullish wedge or the bullish reversal. So this would be a falling wedge. We have a downtrend, and then we start to see a wedge forming between the price. So again, we have lower highs and lower lows, and eventually price contracts, and we see a bullish breakout to the upside. So there are two ways to trade the rising and falling wedges. One, you have a safe entry. The other, you have a risk entry. So what do we mean by that? So essentially what we're saying is a safe entry is where you see the pattern forming, you've got the wedge here, and you wait for this breakout to occur around about here. So your stop loss is a lot bigger, meaning that there's a lot more to risk. So your stop loss will always be above the wedge trend, and you wouldn't start until you get to about here. So there's always potential for you to potentially lose if the trend reverses and goes up. Whereas a risk entry would be where essentially you see the pattern forming in the wedge and you take your shot here. So this is where you jump in on the price, and your stop loss is still above here, so it's a lot smaller in terms of the risk that you're actually using, but the likelihood of it hitting could be more, and you haven't given it time to really form its full pattern. That would be a risk entry. So essentially the safe entry is giving you more confirmation. So you see the wedge form, you've seen the pattern form, it's come to this point here, you can see it's broke out of the wedge. Now we know pretty much in a bearish reversal. So what we would look to do at this point is, we've got all these confirmations, we'd still place our stop loss above here, and we'd take our trade around here. With a risky or risk entry, again, there's less confirmation, so we see it hit here. There's no guarantee that it is going to go down, so there's a likelihood that it still may go up a bit further before we see it break, or the pattern is just not there and there is no reversal and it continues to go up and it'll hit your stop loss. Okay, so here is a risk entry for a rising wedge entry. So as you can see here, we've got the wedge formed, we've got the pattern forming here, as you can see. So around about here is where you would take your trade, and as you can see, there's the stop loss right above, so you can see the size of the stop loss there. So not as much to lose, but again, we haven't had a guarantee that it's going to go down and break through. So here your trade will be taken, and what we're looking for is the pattern to play out. So we're looking for a bearish reversal based on this rising wedge, which in this case happens, as you can see there. Safe entry would be, let's look at the same idea here, and we've got the pattern formed, we've got the rising wedge formed, and instead of taking our trade here, we take our trade here. It's had the confirmation, so it's hit the top of that rising wedge, and now we're seeing a reversal, and it breaks this, which gives us confirmation that there is going to be a reversal pattern, and now we're going to see a bearish trend happen. But again, we're taking our trade here, but our stop loss is still up here. As you can see, there's more to lose in terms of if it does reverse and go up, However, there's been more confirmations made, so it's up to you how you want to play this trade. And also, I suppose it depends on how you're wanting to trade in general. Are you day trading? Are you scalping? So these are things to take into consideration when you are trading. But as you can see, the difference between taking the trade here with a smaller stop loss, with more risk in terms of that there isn't a guarantee it is going to form a downtrend and see a bearish trend happen. And here is where you'll see more confirmations, and essentially your stop loss is a lot larger, but again you've had more confirmations from that as well. So here's falling wedge risk entry. So the same thing happens. We've got a downtrend. We start to see how we're getting lower highs and lower lows. Around about here is where we would take our entry point for a risk entry. So it hasn't touched the bottom fully, but as you can see, there is a double bottom formed between the two candles. So this would be our point of entry, and our stop loss would just be below the falling wedge line there, as you can see. So again, we haven't got full confirmation, but we still take that because it kind of still follows the same pattern that we're looking for a bullish reversal. And again, the stop loss is a lot smaller. And if we look at a safe entry, the same thing would apply here. So we wouldn't take our initial entry here. We would wait for the pattern to break, or the wedge to break here, which would give us another indication that we are in a bullish uptrend now and the reversal has happened. However, our stop loss is still below this falling wedge trend line here. So there is a bigger space for us to potentially lose more capital. But again, it's signified what we're looking at here, which is a reversal and more confirmation than the previous one here. So let's look at this on another chart. So we're looking here at the Bitcoin chart, and this is on the daily on Binance perpetual futures contract. And as you can see here, this is a good example. So April, we were up at 65k. So what did we see? We saw an uptrend right here, and as you can see, what we found was we got higher highs and lower highs as well. This is a perfect example of a wedge. So we have the uptrend, we see the first pattern form here, the second pattern, and as you can see, we start to see a wedge forming. At which point we could have taken our trade in two particular places. So in this case, we could have taken it here, and this would have been a risk entry. So we would put our risk here, and then this would be our result. So this is our risk entry point. So we would have jumped in here, and based on what we recognize from this rising wedge, there's going to be a bearish downtrend, which it formed perfectly there. So we hit there on the 14th of April, and by the 25th of April, we were down. Now, if we was to do this based on a safe entry point, we would essentially jump in around about here. And as you can see, this is a safe entry. We've waited for it to break the wedge, which it has, and it's fallen down. However, as you can see here, we did have some uptrend again before we saw a further break down to a full bearish trend, which you can see here. So essentially, you can find these patterns wherever you look at it. It's better for like day patterns to see the forming, because you can kind of see what's going to happen long term. So, you know, this happened from the beginning of February all the way to April. So by this point here, so the 21st of Feb, and then 13th of March, and then 14th of April. So almost a month within each one. So if you were able to spot this pattern forming, say by this point, so you've got your first pattern or the second sequential move of a higher high and a higher low, what you would be thinking is, if we would put our trend line as we would here, that potentially now what we're going to see is if we see another a point here form, then we are definitely looking at a bearish trend. And over the next couple of days, so 14th, 15th, 16th, 17th, 18th of April, so 4 days, and you see that pattern happen right here, you know you've pretty much found a bearish reversal at this point. Everything has confirmed what you were looking for. You've seen your wedge form, you've seen the 3 points of entry here, so you've seen it hit the bottom, top, bottom, top, bottom, nearly the top, and then again it comes here. So you could have essentially got in 4 days earlier with more risk in terms of the fact that it could go a bit higher beforehand, which it didn't. But if you jumped in here, you would have been 4 days early, and you could have rode this down from, so around about 24% that move over 11 days. So you could have got in 4 days earlier and had a reward. And if you didn't and you jumped in on the safety based on what we've just discussed, you still would have got 16%. So it's still a big move over 7 days. That is a rising and falling wedge reversal pattern. Hopefully that kind of gives you a good overview of what to look for. You can find all this information out on our TradingView, and you can follow us, and we put information out on technical analysis on coins as well as educational posts, as you can see here. And also you can visit us at altsignals.io, where we offer Binance trading signals and also the buy and sell indicator as well. And you can have full control over that, and also use backtesting if you purchase the lifetime membership. You can go to altsignals.io. You'll find the link in the description. And as always, guys, if you could give us a like, subscribe, hit that notification bell, and we'll see you in the next video.